You are listening to the Atlanta Real Estate Forum radio show, all about real estate edition, shining a light on the movers and shakers in the real estate industry, the home builders, developers, realtors, and suppliers making it all happen.
Good morning and welcome back to the Atlanta Real Estate Forum Radio's All About Real Estate Edition. I'm your host, Carol Morgan, and I'd like to give a shout out to our show sponsor, Denim Marketing. Denim Marketing knows that marketing is not one size fits all, so try them on for a comfortable fit. Well, developers got super creative with land planning and amenities since the Great Recession. We are joined today by Katie Fidler, Director of Research and Communications with St. Bourke, and they know all about creativity and all about development. So welcome to the show, Katie.
Thank you. I appreciate that. I'm excited to join you guys.
Yeah, I think this could be a fun conversation. Well, we'll just kick it off. Tell us about yourself.
Yeah, I'm Katie Fidler, and I am the Director of Research and Communications at St. Bourke. I am a native of Atlanta. I've lived here all my life, and this is actually my 10th year being involved in Atlanta real estate. So I've got a really deep background here in this market specifically. I graduated from UGA, and I've held a variety of positions in real estate, starting off with commercial and office leasing, and obviously now I've transitioned more into the investment and development side.
Well, if you are one of Atlanta's 2 or 3 natives, then we're glad to have you here. So rare in the city that you meet anyone that was actually born here. So that's kind of cool. Well, for our listeners who aren't familiar with St. Bourke, let's give them a 30,000-foot view.
Yeah, absolutely. So St. Bourke is an asset management and development company. We are headquartered here in Atlanta. Our basic position is that we are a one-stop shop for asset management and development needs. So our services cover the full gamut, running from the very beginning of a project through, due diligence and acquisition, all the way through, planning and development, and to the very end, which is, ongoing place management. So we really complete that full cycle. We are experts in value engineering, unlocking hidden value, problem solving, troublesome sites, and repositioning abandoned or stalled residential projects that maybe have forgotten about or gotten a little neglected over the years. And we like to come in and, just reinvigorate them and breathe new life into them. So St. Bourke has been a business since 2005. And we actually come from an international investment firm that came over here right after the Great Recession. And the situation they found themselves in is they acquired this massive property portfolio, and they were having a really hard time coordinating different teams in each market to manage those assets. So they brought that in-house, and they started building the team that eventually split off and became St. Bourke. So we have a very unique origins. We view all of our projects through an investment lens. And that's kind of where we have found our niche in the market, is kind of just our perspective on how we approach development, and then the full cycle of services that we're available, or that we are offering to our clients.
Oh, that's really cool. And I think you're right. A lot of the development companies out there don't necessarily look at the development and the land from the investor's viewpoint. So I think that's probably very, very helpful, because ultimately that's probably who you're working for, right?
Yeah, we do. We do have a lot of investment clients, home builders, banks, private property owners. So we serve, many different kind of segments of the market, but certainly investment firms and home builders are our top 2.
Yeah. Well, as a developer, you definitely have a pulse on the trends and what's going on with land development. And I know it's changed. So what's different post-COVID?
So I think I would be remiss to jump right to the things that have changed. And I just want to refocus in on, this isn't a new trend, but cost and keeping costs down is more important now than ever before. St. Bourke has always said about, for planning and value engineering, every site. But with the way land prices have skyrocketed over the last, 18 to 24 months, builder margins are tighter than ever. So they're looking to definitely not cut corners, but find ways to thoughtfully and creatively get those prices down so that they can ultimately offer more affordable homes. So that's kind of the one thing that's not a new trend. Cost is always important, but it's certainly under a big, powerful microscope right now. In terms of things that we have actually seen change since the kind of the onset of the pandemic and, over the last 2 years, I'd say, is we're seeing a lot more construction and residential development activity farther from the urban core. So I'm talking 30, 40 miles from the Midtown downtown area. At the end of last year, 2021, 8 of Atlanta's 10 top performing communities were actually located more than 40 miles from the urban core. So we're seeing places like, Fayette County, Bartow County, Barrow County, Paulding County experiencing growth that I think, quite frankly, no one would have ever anticipated for them. And I think a lot of that has to do with, the work from home movement, right? We came into a period where all of a sudden you weren't commuting into the office every day, or maybe you weren't commuting in at all. So it was no longer as important for you to be within a 15 or 20-minute drive. And that really opened up those, what we call the exurb areas on the fringes of the city. So we're seeing a lot of activity there, and not just from the single family side. There's a lot of multifamily activity happening in the suburbs and those exurbs as well. And then I would say another big change that we're starting to see kind of on the back of coming out of the pandemic is, buyers are expecting a lot more out of their communities now than they were 3 years ago. I mean, we're coming off of a period where where people had to live, work, and play all within the confines of their house or their really small community. And so buyers are really acutely aware right now of what they need. And coming out of this pandemic period is really highlighting the gaps in their current situation, in their current communities or homes. And people now, when they're shopping for a house or when they're shopping for a neighborhood or an area in general to live in, they're looking for more interactive and creative amenities, and more emphasis on health and wellness. And they're requiring more like top-notch telecom communications, right? Because we're Zoom meetings all day. We're doing a lot of FaceTiming with relatives. And, we're educating our kids from homes on days where they have digital learning. So there's a lot more emphasis on how can this community make my life better? Whereas I think the mentality used to be, where can I find a home that's available that I can afford?
Right. Well, and it's not just the amenities, and it's all the things you've mentioned, but it's even little things like, I want my Zoom room to have a door on it.
Yeah.
All these big open floor plans that were so cool weren't so cool anymore once you were stuck at home with screaming kids and barking dogs and everything going on and needing to focus. So
you're exactly right.
Yeah.
And builders are dealing with their own kind of transition where, not only do people have different expectations of their community and the way that it's designed, but they have different expectations of their homes too. And,
absolutely.
And to your point, builders are having to adapt, and they're having to change up their floor plans to, create more flexible spaces. Because maybe I don't need an office every day of the week, or maybe I don't need 2 guest rooms. So it's very interesting how builders are responding to the kind of the tweaks in demand as well.
Well, you mentioned amenities and how amenities have changed a little bit. What's the big change that you see?
Yeah, so the biggest thing that jumps out to me is, think back to the days, the late 90s, early mid 2000s. Seems like every community that had more than 100 of 150 homes, they got a pool cabana amenity package. And it was kind of a no-brainer. That was very, very standard. And that was really not put into the context of who's going to be buying these houses. And so now the communities we design and develop, I would say we take a much more thoughtful approach to what amenities we are including. And look, that's not to say that we don't do pools and cabanas anymore. Obviously, if a community and the people and the residents that are going to be moving into that community, if that's something that's high demand for them, then obviously we want to deliver that. But it's no longer a blanket kind of a no-brainer decision. Oh, they're getting a pool. Oh, they're getting 2 tennis courts. It's, I would say it's a lot more thoughtful, and we're having to be a lot more creative. So, our kind of thought process right now, and when we are planning and kind of laying out a community and its amenities, are how can we give residents everything or almost everything they need to live, work, play, and be happy right here at home without having to jump in the car and drive 5 miles to a county park or something like that. So we spend a considerable amount of time understanding the demographics of the submarket and the community's targeted buyer profiles, so that we can design plans and amenity components that are tailored specifically to who we think are gonna buy the home. So for communities and markets that have a lot of young families, we're looking at amenity components like splash pads and pocket parks with custom playground equipment and paved walkways to make cruising with a stroller or a little kid on a tricycle a little bit less anxious. And then for our communities that are in markets that have a higher retirement population, we're looking at more wellness focused amenities like outdoor fitness areas, walking and biking paths, pickleball courts, and inclusion of ongoing social managers that can institute programs that encourage that ongoing interconnectivity between the residents of a community. But in all communities, kind of regardless of the target profile, we're always looking for ways to get people back outside and get people together, because that was something I think we all missed, when we were in lockdown, even if we were never crazy about our neighbors, or it was like, oh, I wish I could see someone other than the immediate people that live in my house, right? So the inclusion of both indoor and outdoor gathering spaces is something that we're putting a lot of thought and consideration into. So that could be fire pits, community lawns where, you could do weekly movie nights, multi-use sports fields, clubhouses and community lounges as central gathering places. And then, of course, being outside, people think of movement, getting around. So we are really bumping up emphasis on walking trails, equestrian trails, bike, all types of trails. And in a lot of our communities, we will incorporate different types of trails intended for different uses, really just to kind of up that diversity. And we're obviously incorporating, more pocket parks, and we're really trying to preserve as much of that, beautiful community green space as possible during the planning phase.
Yeah. I know that we've talked before about one of your communities that had a pool and an amenity center, but and it sat since the Great Recession, and you all went in to refurbish it and didn't really want to add a second pool, but the first pool wasn't big enough. Talk about how you changed that exactly. And added a whole new amenity there.
Exactly. So this was a fairly large, I think it was about a 450 unit community in Hall County near Gainesville. And when our client bought in, it was partially built. I think about 80 of the 400 homes were put up before the original builder, lost it in the downturn. Right. So our client came in and they purchased the remaining lots. And the issue that they kind of came across when they were looking at it is, the community had a small pool, a very small cabana, if you could call it that. And the amenity was perfect size for the 80 houses that were already there. The issue is that it was going to be extremely undersized at full build out when there were 400 families living in there. So instead of just defaulting, okay, we're going to bring in a crew, we're going to double the size of the pool, or we're going to build a second pool somewhere else in the community, we really wanted to kind of look around the community in terms of, what hidden value was there. And we came across just an absolute gold mine. So, just a couple 100 feet behind the existing pool and cabana amenity, buried in the community's green space, was a beautiful 6-acre lake, very pristine and untouched. So what we ultimately ended up doing, and not only because it was what the resident, we spoke with them and they essentially voted, yes, we would rather have this than a bigger or a second pool. What we ended up doing is we really cleaned up that lake. We did a ton of work in getting it cleaned up. We got it swim certified. We had floating docks and custom kayak racks put in, and then we actually constructed a half-mile walking trail that was all mulched and really nice. Did a ton of landscaping throughout this area, and we essentially turned this abandoned patch of woods that I guess people would go in there to dump trash. So we took this like little pocket that was completely ignored and forgotten about by the whole community, and we turned it into this like really vibrant, interactive place, and that for less than the price of developing a second pool or expanding it, and the benefit that the residents got was way more.
Right.
So yeah, that was a big win for us, especially because it was such a big win for the residents. They love it. Every time I'm out there checking on the site, there's a dozen people walking the trails and fishing off the pond. So that was a huge success story, and we're always looking for opportunities like that to examine what's there in the plan or in the community and seeing how we can extract value out of that.
What a fun amenity. A pool's one thing, but a lake is a completely different, it's a different feel, it's a different vibe.
Exactly.
So it's
And
kind
when
of the
you're
best.
done at the lake, you could still
go to the pool. Right.
Exactly. So you're
I
not
love that.
sacrificing one for the other.
Right. Well, you recently released your second quarter market report. I'd love to know what the big ahas are from that report. And then, where are we headed? We're kind of already into Q3. Where are we? Where are we going?
Yeah, so there's certainly a lot to unpack there, and I'll go ahead and just state on the record that I'm much less doom and gloom than a lot of the headlines that we're seeing coming out on both a national kind of perspective as well as Atlanta. So I try to remember that the negative headlines are what get the clicks and what sell the papers. But my biggest takeaways after analyzing the data, not just from the second quarter, but being up to my eyeballs in this data since the onset of the pandemic and in the years prior, is that, we are in a very unique period right now because we are actually witnessing the market recalibrate in real time. So on the surface, we're seeing this pullback in this apparent pullback in demand, and, that can be a little bit discouraging, but, the Atlanta market specifically really needs this self-correction. If we kept going at the rate that we were seeing, where, we're seeing a double-digit percentage increases in rents and home prices, it was actually doing more harm than good to the Atlanta housing market in the long run. At the rate that we were going, only 5 to 10% of Atlanta residents would even be able to participate in the housing market. And that, of course, would immediately flip the market to stagnant. So, this imbalance right now, where we have a big imbalance between supply and demand, and 60 to 70% of Atlanta households already have been priced out of the Atlanta housing market just based on median home price and median income. But what's important to remember here is that demand for housing in Atlanta is not gone. People, especially millennials, they want to buy homes here. The issue right now is that they just can't afford it right now. And the market is too chaotic and too frenzied. And, as of now, mortgage rates are causing a little bit of anxiety as well. So, Atlanta is not facing a demand issue. We are facing a supply issue that has driven prices to a point where demand is being impacted. But it's not that people stopped wanting to buy houses in Atlanta. It's that people have stopped being able to afford houses in Atlanta. I would say that, again, another big takeaway that I'm seeing is that high home prices and mortgage rates, they're definitely having an impact, right? I think I recently read a statistic where, less than 15% of, potential home buyers felt that right now was a good time to buy in the market. Now, obviously that's very anecdotal, but, that does give you some context as to where the mentality where the mentality of potential home buyers is right now. So, the pullback in demand that we're seeing from buyers is translating to a slowdown in activity from most home builders in terms of new housing starts. The bad news is that that's not going to do much in the long run to help improve our home supply issues in Atlanta. But less demand in the short term from builders could lead to freer flowing supply chains, more skilled labor, and it could actually ease the rising costs of, both construction materials and labor. So those are, in terms of the pricing, that's definitely something that we're seeing have a big implication. And so you read the headlines and your first thought is like, oh, that's discouraging. But, you got to think of how it's going to help the market correct and how it's going to bring us back to more sustainable levels of growth. So, over the last 12 months, keeping with the pricing, the number of starts of new homes above the $300,000 price point has dropped more than 60%, while the number of starts of new homes above 400,000 has shot up by more than 46%. So, that right there illustrates that, the home prices are just, really, really skyrocketing at a price that's, really having an impact on kind of the average, home buyer here in the Atlanta market. And then, Atlanta continues to sell homes faster than we replace them. The big, one very startling statistic that I recently analyzed for this second quarter report is since the beginning of this year, 251 communities in Atlanta have sold out of lots, out of houses, completely built out. Over that same 6 month period, we only started 148 new ones. So essentially there are 103 fewer communities selling homes right now today than there were just 6 months ago. So again, that just provides some additional context into, the housing supply and why we at St. Bourke expect it to remain tight, especially since we are seeing builders slow down their starts a little bit. The ones that survived the Great Recession, they learned their lesson of, holding a bunch of specs in inventory. No one wants to be exposed like that. No builders want to be exposed like that. So, they're responding by starting less new homes. So understandable from their perspective, but again, it does lead us to believe that, home supply, especially new home supply, is going to remain tight for the foreseeable future. And then I think the last big takeaway is something that we've already briefly touched on, is just the growing suburbs and exurbs of Atlanta. At the end of last year, 8 of the top 10 communities were, 40 plus miles away. At the end of second quarter, that number had actually dropped to 6. But 2 of the 4 communities that are within that 30 miles were infill townhome communities. And as of today, they're both already sold out. So they're already back off the table. So that's really the main takeaways that, I saw from third quarter, mostly having to do with pricing and the implications that's having from both not a buying perspective as well as a, construction and development perspective.
Well, it's kind of interesting. Obviously, it's a supply and demand story, right? There is no supply and there's still demand. So I think that's a great segue to build for rent.
Yeah.
So, build to rent's a huge trend. What do you see as its impact? Is it helping to solve part of the problem, or is it the problem? You hear it both ways. So
sure,
where do you stand?
Yeah, you definitely hear a lot of people who will stand up and say, BTR is the problem. You're not going to hear me say that. I don't necessarily believe that's true, because at the end of the day, like, what the bottom line is, and it doesn't get mentioned enough in terms of BTR, is that the country, the whole US is facing a really critical housing shortage. Based on what report you read, we are at a 4 to 5 million housing unit deficit on a national level. So at the end of the day, the built to rent trend is adding housing units to the housing supply. So at the very baseline, that's good, and we need the housing units. And I know that certain counties and certain cities and towns, they would rather them maybe be for sale versus rental. But at the end of the day, Atlanta and the U.S., we don't have enough houses to house the people who live here or want to live here. And built to rent is helping to plug that gap. Which is important, and it deserves credit for that. And I would say another positive impact of built to rent is that, you know, these types of projects are offering people and families the opportunity to live in beautiful, brand new houses in these really nice, well-designed, vibrant communities, whereas otherwise they simply might not be able to do so because they can't come up with the 20% down payment, or they haven't been able to absorb the 25% increases in home prices over the last 24 years. And so it allows, I think of like young professionals, young families who otherwise would not be able to live in a house. They would have to rent an apartment. It affords them the opportunity to have a fenced in yard and like play catch with their kids in the front yard and teach their kids to ride their bike in the driveway. It gives families and people who otherwise would be forced to live in an apartment the opportunity to actually live in like a brand new standalone high quality home. And I love that. I think more people deserve that opportunity. So I would say that's a huge positive impact. And you know, the rise of built to rent is certainly driving demand for lots, right? Which is creating competition amongst traditional for sale home builders, and it's driving lot and land prices up. And you know, there's a ton of capital flowing into built to rent these days. So we have found, you know, St. Bourke in our experience, that these built to rent firms are typically willing or able to pay a little bit more for land, and they're willing to eat a little bit higher development costs, and they're generally willing to invest more into upgraded community infrastructure and features like amenities, because they're going to be continuously trying to attract new residents. It's not like a standard for sale home builder where they got to sell every house once and that's it and they're done. These types of communities are essentially having to sell every house every year just to get people to renew their leases, or, you know, attract new residents. So, you know, built to rent in my mind is more competing against those, you know, class A, class B multifamily apartment projects, you know, and less competing with for sale communities. That's how I kind of see everything playing out. And of course, the rise of built to rent is bringing out a lot of NIMBYism, right? Not in my backyard,
yeah.
Especially in the exurbs, in the more suburban and rural communities that aren't used to seeing a lot of high quality rental product. So, you know, a lot of what we've been trying to do over the last 12 to 18 months is just help re-educate about built to rent, and who is, you know, what type of residents and renters are being attracted to these types of built to rent communities. And just, you know, I think they just have gotten built to rent has gotten kind of a sticky reputation, and mostly because people don't understand.
They don't understand it. No, I agree with you. They don't understand it, and it's the whole not in my backyard, just like you said. And, you know, build for rent, I think, fulfills a niche of people who, you look at the millennials, and it's just like you said, they can't afford to buy in the area they want to live in, but they might be able to afford to rent. So, you know, it's fulfilling a need, and it's just interesting to me to see all these cities and counties try to pass zoning against it, because it's really discriminatory zoning, and it really goes against the fair. Yeah, it goes against fair housing policy. I mean, how can you say it's okay to build a single family home here for sale, but it's not okay for you to build it to rent? I don't know. I don't get it. It's going to become an interesting legal battle, I think.
It sure
because
will.
There's an awful lot of people who think, you know, no, rentals are so bad. And, you know, it's a stigma against rentals from rentals that aren't taken care of. But, well, you touched on today's market's a little different. Today's person who's renting these single family build to rent homes is a little different. What does that renter look like today?
Yeah, so and that's probably the biggest focus of our re-education efforts, right? Is, you know, there are a lot of misconceptions right now about who is renting homes in these new built-to-rent communities and the type of demographic that these communities are targeting. And I think a lot of it comes from just a very outdated and archaic mentality. You know, I think 20 to 30 years ago, most people who were renters out of necessity, right? So to put it really simply, I think a lot of renters 20 to 30 years ago rented because they couldn't afford to buy a home. So they rented. So renters got this, you know, really unfortunate and unfair stereotype as maybe not being as financially well off or stable as their home buying counterparts, right? But that is just not the case at all anymore, especially in terms of these built to rent communities. So what we're seeing is, you know, while there are definitely renters who are renting because they cannot afford to buy a home, in most cases it's, you know, they can make the monthly payment, but they don't have 20% down to put down. But, you know, we're seeing more and more renters in these built to rent communities that are renters by choice, right? They could go buy a house in the for sale subdivision next door. They're choosing not to. So a lot of it, you know, some of the examples that we're seeing from this is, you know, young professionals, right, who are early days in their career, and they don't want to get tied to a specific city because they have no idea where their careers are going to take them. Or they know, well, I don't want to buy a house because I have a feeling that I'm going to get promoted to the corporate office next year, or I'm going to look for, I think I'm going to look for a new job. I think I want to transition out and I don't want to lock myself into a 15 or 30-year commitment on this house when I don't even know if I'm going to live here in 12 months. So we're seeing a lot of that from the young professionals. We're also seeing a lot of young professionals who make a very healthy annual wage, but they're dealing with like student loan and other debt where they can make that monthly payment, no problem, but they don't have the 40,000 or 50,000 to put down. So that's, you know, again, that's where the built to rent comes in. You know, they can afford to pay those rent premiums. They just don't have a bunch of money sitting in the bank that is required to buy a house. We're also seeing a lot of demand from, again, young families who could financially go buy a house, but they want to be able to upsize their home as their family grows. And so, you know, hey, I've got 0 kids right now. I don't want to go buy a 5-bedroom house right now. I don't need 5 bedrooms right now, but I might in 5 years. So we're seeing that from families. And then we're also seeing on the opposite end of the spectrum, mature families and couples, and they've cashed out the equity on their homes because it appreciated in value 40% over the last 2 years. And now they just want to move closer to their children and grandchildren, and they don't want to be locked into another, you know, 30-year commitment. So we're seeing that demand from the, you know, the baby boomer the generation.
Well, it's Gen X too. Hate to tell you that. I'm one of those. I have all these friends that have sold their houses, made all this money, and it's, you know, they're just not interested in the upkeep anymore. They don't want to have to paint the house. They don't want to mow the grass. They don't want to. So in a lot of these build to rent communities, it's, you know, it's a lock and leave lifestyle. They can live in a single family home and still have the dog and still have all the space and, you know, not share a wall with a neighbor, but they don't have any of the responsibility that comes along with ownership. So to them, again, you talk about there's a little bit of a premium there for renting, but to them, it's worth it because they don't have to. The water heater goes out, not my problem. Right?
Yeah, yeah. And you know, you've actually absolutely hit the nail on the head, right? It's you know, built to rent communities are great because they do offer that low maintenance lifestyle. Anything goes, you got a leaky roof, not your problem. AC goes out, not your problem. So not only is it not your problem to deal with, it's not your problem to pay for, right? So that you know, can be a huge burden off the shoulders, especially of those more mature families who are maybe on fixed income, they've got a tighter budget. So not having to, you know, pencil in, you know, basically contingency funds every month or every year to replace a roof or a water heater, or
It's a great for a fixed income.
yeah.
Yeah.
And a lot of people are more than happy to pay an extra $250 a month to never
have to deal with it. Well, you think about it, they've been there, they've done that. They had their house for 20 years or 30 years or whatever it was, and they know what can go wrong. And they also know that in new construction, they're not going to have a lot of those problems.
Everything's got a warranty.
So, exactly. Yeah, it's all under warranty. If it breaks, it's not their problem. And chances are it's not going to break because it's brand new.
Yeah, exactly. And I think my last, big, my last big takeaway in terms of, the renter profile of these built to rent communities is that, it's important to consider that, the asking rents in these built to rent communities are typically a little bit higher than nearby and comparable traditional multifamily apartment projects, right? And that monthly rent payments are, by a couple $100, they have that premium. So again, that just reinforces that, built to rent communities are not targeting, lower income earners like a lot of these neighbors and these municipalities. They think it's just going to attract a certain, demographic or, income profile. And they just got it wrong. Like, those days are over. These built to rent communities are, a lot of times the rents that they're asking each month are higher than, someone could go down the road and buy a house and get their mortgage payment for. So again, that brings it all back to, these are affluent individuals and families. And, a majority of them are making the conscious decision, I can buy, I don't want to right now. I want to wait till the market cools off for a little bit, or I need to save $10,000 more for a down payment, things like that. So that's really kind of, my biggest takeaways from built to rent, and where I think a lot of people have gotten it wrong.
It's a lifestyle choice.
Exactly.
It's a lifestyle choice in many, many cases, whether it's that you're, on the early cycle, if you're going to buy at some point, or you've owned and, you don't want to do that anymore, or you just want to live in the area of town you want to live in.
Exactly.
So it's about lifestyle. So hopefully they'll figure it out. And, if you can continue to get out there and spread the word, and, people will listen. So anything else we haven't touched on today that you want to add before we sign off?
No, I think that's it. If anyone out there is interested in reviewing our second quarter market report, that is available on our website, which is just stbourke.com, stbourke.com. We have an entire library of all of our past market reports with our custom commentary. And again, all of our analysis and commentary comes from the lens of property investment and development. So it has a little bit more context versus those more generic market reports that get put out on a national level. So we spend a lot of time producing those. A ton of analysis and research goes into them. So we're really proud to offer those every quarter. And again, you can get those from our website, stbourke.com. Or you can reach out to us directly at our office. Our number is 678-853-2530. And we're also on LinkedIn and Instagram, where we provide content as well. And you could just search for St. Bourke, STBOURKE, on either of those platforms.
Excellent. So if you guys are looking for a developer, give them a shout. If you're looking for market information, give them a shout. If you just kind of want to follow along with the trends in the market, great place to start. So with that, I'm going to say it's a wrap of this week's Atlanta Real Estate Forum Radio's All About Real Estate edition. I want to thank Katie Fidler with St. Bourke for joining me in studio today. So thanks, Katie. Thanks for your insight.
Thanks for having me. I appreciate it. Had a good time.
Absolutely. On behalf of our show sponsor, Denim Marketing, I'm your host, Carol Morgan. I want to thank everyone for tuning in. If you enjoyed today's show, there's lots of opportunities to follow and interact with Atlanta Real Estate Forum. You can follow us on Facebook at Atlanta Real Estate Forum for more Metro Atlanta news. Sign up for the newsletter at atlantarealestateforum.com. And continue the conversation by downloading and subscribing for free on iTunes, Stitcher, or Spotify. Lots of our episodes are also on YouTube, so go to YouTube and click on that little notification bell at the top so that you never miss an episode. If you want to be on today's, or you want to be on the show, or you want to sponsor the show, reach out to me, Carol at denimmarketing.com. Again, thank you for listening. I look forward to seeing everybody right here again for our next episode.
Atlanta Real Estate Forum Radio is made possible by Denim Marketing, the publisher of Atlanta Real Estate Forum, Atlanta's favorite source for real estate and home building news. Denim Marketing is a comfortable fit, like your favorite pair of jeans. Denim Marketing tailors marketing strategies to meet your specific needs and niche. Try them on for size. They will work to create a perfect fit for your company's marketing program. Call them at 770-383-3360 or send an email to info@denimmarketing.com. For more information on Atlanta Real Estate Forum Radio or to inquire about being a guest, contact info@atlantarealestateforum.com. Check out the radio show by visiting atlantarealestateforum.com or by listening to the show on your favorite podcast app. And if you enjoyed today's broadcast, we'd sure appreciate a rating and review on iTunes. Thank you again for listening, and we'll see you next time on Atlanta Real Estate Forum Radio.